Something is quietly building in the GTA rental market. Most people are looking at sales numbers. Almost nobody is looking at what those numbers mean for renters. But here's what the data is actually telling us. And it changes the picture completely. Active listings across the GTA just dropped 13.5% year over year. At the same time, home sales are up nearly 11%. Buyer competition is increasing every single month. And thousands of would-be buyers are still sitting on the sidelines. Those people are not disappearing. They are renting. And that rental demand is building up like pressure under a lid. Let me walk you through exactly what is happening and what it means if you own a rental property right now, or if you are thinking about buying one. First, let us establish where the GTA market actually stands this July. The Toronto Regional Real Estate Board just reported 6,000 sales in July. That is the strongest July the GTA has seen since 2021. Sales were up 10.9% compared to July last year, and up 13% month over month on a seasonally adjusted basis. TRREB President Alekia Berry-Sproul called it a significant turnaround. And honestly, the numbers back that up. The average selling price came in at just over $1,051,000, down 5.5% year over year. The benchmark price representing a typical home is down 5.4% annually. Now here's where it gets interesting for the rental side. Lower prices have brought more buyers into the market, but not everyone can buy yet. Borrowing costs are still a barrier for many households. RBC Economics noted this week that affordability has improved, but TRREB is clear that more relief is still needed. So what happens to the people who cannot quite buy yet? They keep renting. They rent longer. They compete harder for available units. And here's the part that actually matters for landlords right now. Active listings across the GTA just hit 30,015. That sounds like a lot, but it is still up only 26% from last year's very low base. And new listings only rose 5.7% compared to July 2024. Supply is simply not growing fast enough to match demand. That gap between supply and demand is the rental story nobody is writing about. When resale inventory tightens, buyers feel it first. But renters feel it next, and the ripple hits fastest in the 905 region. Cities like Ajax, Pickering, Whitby, and Oshawa are where this is most visible. These are the cities where affordability drove huge renter populations in recent years, and they are the cities where rental competition is going to intensify first. Think about it this way. A family in Ajax cannot afford a detached home at current prices. They are not moving into a condo downtown either. They are renting a townhouse or a semi in the east end of the GTA, and there are more families in that exact position today than a year ago. And before I continue, if you are finding this useful, hit subscribe so you never miss a GTA market update. Now back to what we were talking about. Here is what most investors get completely wrong about the rental market. They wait for the buying opportunity to feel obvious. By the time it feels obvious, the rental yields have already compressed. The window is always earlier than people think. Let us talk about the specific property types that matter most here. Freehold townhouses are the sweet spot right now. The average freehold townhouse in the GTA is sitting at around $912,000. Down 5.5% year over year. That is a meaningful price reduction on a property with serious rental demand. A 3-bedroom townhouse in Whitby or Oshawa. A freehold semi in Ajax or Pickering. These are the properties where rental demand from young families is strongest. And these are the cities where prices have pulled back enough to make income math work. Semi-detached homes are also worth watching closely. Average price down 4.7% year over year to around $1.04 million. In Pickering and Ajax, you can find semis below that GTA average. 2 units means 2 income streams in some configurations. That matters when you are running numbers on a purchase. Now here's the part that surprised me. when I looked at the data more closely. Condo sales surged 14.3% year over year in June, and condo prices are down 9.4% to an average of $631,000. That is the sharpest price correction of any housing type in the GTA. But the story for condo rental demand is complicated. Many investors who bought pre-construction condos are now closing. Some are renting them out. That is adding condo rental supply to the downtown Toronto market specifically. But that condo rental pressure is concentrated in certain pockets. It is not spread evenly across the GTA. In the 905 cities, the rental supply picture looks very different, tighter, more competitive, and more landlord-friendly than downtown. This is why neighborhood selection matters enormously right now. The rental market is not one market. It is dozens of micro-markets behaving very differently from each other. If you are evaluating an income property purchase right now, here is how to think about it. Start with rental demand fundamentals. Is this a neighborhood where families want to rent? Are there good schools, transit access, and employment nearby? Whitby, Oshawa, and Newmarket check those boxes right now. Then look at price reduction from the peak. Properties down 5 to 10% from 2022 highs. In a neighborhood with stable rental demand. That combination is what creates long-term income property value. Then run your actual numbers conservatively. Use today's mortgage rates, not projected future rates. Make sure the property cash flows at current rent levels, not projected rent increases. That discipline is what separates investors who build real wealth from the ones who get caught when conditions shift. One more thing worth mentioning here. TRREB is projecting accelerating transactions and increased buyer competition in the second half of 2026. TRREB President Daniel Steinfeld said the market is heading toward renewed price growth. That is not a guarantee. But if buyer competition does intensify, as the data suggests it might, rental demand from sidelined buyers will remain elevated through the end of the year, possibly into 2027. That sustained rental demand is exactly what income property owners need. Low vacancy, consistent cash flow, and patient equity building over time. The GTA has always rewarded landlords who bought during the recovery window, not after it was obvious, during it. And right now the data is telling us clearly, sales are up, listings are tightening, prices are still soft. That combination does not last forever. The rental market does not wait for everyone to catch up. It moves when buyer competition starts to squeeze, and the squeeze is already beginning. That is what the numbers are showing us right now. What you do with that information is up to you. Chapters 0. Hook. Rental market. Wake-up call 45. What the July 2026 numbers actually mean. 2. Why fewer listings creates a rental pressure cooker. 4. The 905 cities. Smart landlords are watching right now. 6. What income property buyers should do in this market. 8. In final thoughts.